So, should we buy or sell Bitcoin Cash / the US dollar? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So Bitcoin Cash, it is 14% from the 52-week low, but an astonishing 82% away from the highs. That is huge. Here is bitcoincash.org, so peer-to-peer electronic cash. Fast, reliable, low fees, secure, stable, and simple. Yeah, here are some of the wallets. Yeah, so this is a nice website, it tells you, why you should use Bitcoin Cash. Benefits for merchants. Yeah, I like Bitcoin Cash. But as I have said, many times before, I do think that the transaction costs must get down to 0. Alternatively, you could have a structure where, similar to a debit card, you pay for a debit card, you pay like $10 per year in order to have the card, but that basically means that you have infinite transactions for the price of $10 in transaction costs, I guess you could say. So something like that, but it definitely, it needs to just go further down. So the reason why this one is very interesting at this point is because we are testing a very, very, very big boy horizontal support level. Support back here, even back here, and here, and here, and this is a big deal for the bulls. This is an opportunity that they definitively need to use. If the bulls are not able to buy a multi-year support level, then that is very bad. So yeah, my primary assumption is that the bulls will use this opportunity. They have no excuse not to. Looking at the daily data points here as well, we do see horizontal support. Back here, here, quite clear. Back here as well. You could also make the case that we potentially have a bit of a double-ish bottom formation. So yeah, I mean, there's no reason for the bulls not to use it. Because if the bulls are not willing to buy support levels, then what are they willing to buy? That's the thing. In the job description for bulls in any asset, they are supposed to buy support. Yeah, we do have a bit of a MACD buy signal here. Looking at the RSI, we are a bit in some noisy territory. On the daily data points, yeah, we do have some weakness here on the MACD, but that is of course due to the recent pullback. We are in a low-ish territory on RSI and the PPOs, but not like a screaming buy. What is a bit of an issue here for the bulls is that the bears are quite aggressively using. You see here the 20-day moving average as a short level. Short. Here they even started to use the 10-day moving average as a short level. Yeah, well, you could even make the case that they have recently started to use the 5-day moving average as a level to put in new short positions. So I do think that one could make a pretty darn strong case for horizontal support. Horizontal support. In terms of giving this one a score, I think I will give it. A 4. This is a support level that should work. The problem is that we have seen that leading us down to this support level, the bears were able to go from using the 20-day to short, then the 10-day moving average to short, and now recently the 5-day moving average. So it goes to show you that the bulls are just waiting a bit too much. But I will give the bulls here the benefit of the doubt with a 4, but that is actually quite generous. I think I actually downgrade to 3. Obviously, these numbers I give, there is some level of subjectivity to them. That goes without saying, because when you have a bunch of data, then you have to sort of weight, which of the data points is most important. Okay, so here is the seasonality. Yes, so to the right here, we do see that the seasonality on the horizon is very bad, actually. Very bearish, like waterfall bearish towards late May. That's not good. To the left here, we see that, let's just go to the last 6 years. April is very strong, but this is the last day of April. May is weak. June is very weak. So the seasonality, it is rather unfortunate. I think I actually will give the seasonality here. Yeah, I think I'll give them a -5. I don't believe there are fundamentals when it comes to Bitcoin Cash, at least not fundamentals that are informative for investors. Here we have some correlations. So 58% positive with the S&P 500, 65% with Ethereum, -56% with the dollar index, and 14% with gold. Daily data points: 73% with S&P 500, 95% with Ethereum positive, then -40% with the dollar index, and -60% with gold. So, what happens to Ethereum? Ethereum is very likely going to affect Bitcoin Cash. So here are the weekly data points for Ethereum. Yeah, this is not a good pattern. This is definitively very. Oops, not that one. We need to go with this one. A very interesting type of head and shoulders pattern. Not good. Not good. When we go to the daily data points, yeah, we do see this phenomenon. The 20-day moving average resistance bears short. 50-day become a short level. The 10-day moving average becomes a short level. And with Ethereum here, we do not have anything close to like horizontal support here. So without moving average support, we are sort of lost. Looking at the RSI, yes, we are at a level that sometimes attracts bulls on the daily data points. Yeah, but overall, this is just very messy. Here is Ethereum against the star of the show. Yeah, pretty clear that we have a downtrend, but this looks a whole lot like a major potential rounding bottom in development that is potentially very much bullish. I do like my rounding bottoms. It still is in development, obviously. But this is definitively something to have on your radar. The bad news is that we did form a new low back here in this month, early April. That's not ideal, but there is some sign here that there's a more of an even battle between the bulls and the bears. So let's go to the daily data points. Yeah. It looks interesting. Let's see whether there are some time cycles or not. At least not that consistent. So let's look at the seasonality. Yeah, so over the last 5 years here in green, we do see that Bitcoin Cash, it certainly tends to underperform Ethereum. Okay, so let's now look at Bitcoin. So here I am looking at Bitcoin against the Nasdaq. Yeah, so this is a bit of a messy pattern because we have looking here at these lows, then that's a bit excessive size-wise, but you do see that we have higher lows simultaneously as we have lower highs. So it's a bit noisy, but these kinds of squeezing patterns, they can build up tension. So when they are resolved, it could result in some sizable moves. Now let's go here to the daily data points. I mean, you could make the case that this here looks a bit, rounding bottom-ish in favor of Bitcoin, meaning Bitcoin is outperforming a bit the Nasdaq. Looking at the seasonality, yeah, the seasonality data crushes the hopes for Bitcoin here. Yeah. So I did certainly like the rounding bottom that we formed, potentially will form against Ethereum. So that's something to keep our eye on. Given that we are at horizontal support, that further increases the probability that rounding bottom will come to be. So that's interesting. I think that is the most important thing here. I give the bulls a 3. So we end up with a score here of 0.3, and in favor of the bulls. So horizontal support is the key line in the sand. So that's the thing about this thing here. Line in the sand is sort of like the key point that is holding up the thesis. So even though let's use Gaia as an example. Technicals looked very interesting, fundamentals looked very interesting, but if in that case horizontal support is lost, then the bullish thesis simply it's not valid anymore. And that is extremely important to consider whenever you have an investing thesis. Because no matter what you do in the market, whether it is through a mutual fund or picking stocks or whatever, you are always making some a directional decision. You just are. So even if you have like a monthly investment into a basket of mutual funds, if all of those funds primarily benefit from a bullish financial market, then you are directionally bullish 1 times per month. But you need a certain line in the sand that if it is crossed, it will relatively quickly tell you that you are wrong. And that is very important. The signal you get must be relatively swift. Because if you start to operate with very fuzzy levels, like let's say that instead of saying horizontal support here, I said that my line in the sand is that I am going to be bullish as long as we have an uptrend. But that is very fuzzy because, okay, what kind of time frame are you referring to? Is it like daily, weekly? And also, how many of the data points, recent data points, are taken into account, as reflected through moving averages? Because you can have an uptrend vis-a-vis, let's say, the 200 daily moving average, but a major downtrend vis-a-vis, let's say, the 10-day moving average. Yeah, I mean, that's a huge debate, and I go more in detail into those kinds of topics on if you get the VIP access, because I have just a different format there where I can really explore key topics in the market. I also review the previous trade ideas, to do a bit of an autopsy, figure out what went wrong, and how the method can be modified. Whatever you do, of course, you should use some kind of stop level, be market neutral, and let the trend be your friend.